What's up, everyone? 7-Star Mike here with a potential swing trade for you. This one's a longer term trade. You guys know what to do with that like and subscribe button. Share this video with your friends, and let's go see if we can find a swing trade. So this is what we're looking at here. This is APA, and before I even get into the trade, I want to thank Mina for bringing this one to my attention. We had some options flow on this one Friday, and Mina was asking me to take a look at it. Now, at first, I actually didn't like it. The options flow wasn't enough to really get me into a trade, but the more I started looking at the chart, the more I thought this might be a potential swing trade. Now, full disclosure, I don't know if I'm actually going to take this trade yet. This is APA, this is Apache Corporation, this is an oil play. I do not trade oil and basically know anything about the oil sector. So this is going to be a little bit more of a risk for me in the sense that I don't really understand the company or the sector. However, on a technical analysis basis, you can see a massive gap to fill over here. So what I'm presenting to you tonight is strictly technical analysis. I don't know the history of the company itself. Let's break this down a little bit further and make it easier to see. So this is the full trade setup here. You can see I zoomed in over here. This is the gap we're looking to fill on the left side here. There's a few lines on here. I'm going to try and break them down to make it a little bit easier for you to see. It's a pretty simple setup though. Here's what we're looking at. First is this upward trend line here. We have 1, 2, 3, 4 points where it hit that line. It did break below that line. So I want to see it back above that line. This red line here is actually the cut line that I have for it, and that's based on resistance over here, resistance over here, resistance here. It tried to hold the support but couldn't. It was a support line over here a few days ago, so that's about 1406 where I'm looking to cut this if it goes against me. It's currently trading at 1505. This was on Friday, so that's about $1 below where we are here. So I'm going to give it about that dollar movement before I cut it. You can see where it gapped down. It's a little bit lower than that. It's about another 36 cents below there. So I don't know if that would be the exact cut line. You want to give it a little bit of room if that's a support line. So maybe you give it down to exactly where it gapped. You can see if we draw a line over here. Let me zoom back in and get a line going right at that gap level. There was some support over here and resistance over here, so you can give it another 30 cents depending on your risk tolerance. We're going to look at the numbers for this one first before breaking down the levels. So these are the numbers we're looking at. I'll show you the options flow that caught our attention, but there was over 10,500 contracts traded on Friday. Now, tomorrow we'll see how many of those were opened and closed, or if they were all opened. We're gonna have to watch the open interest, which was 29.25, and we're gonna have to see where that opens tomorrow to know if all of these were opened and held. But this contract is currently trading at 132. Now again, that's Friday, so of course tomorrow at the opening bell, that's gonna reprice to whatever it's gonna do, whether we open up or down. So that's something to take a look at, but we're at about the $1.30 range for this contract. Now here's a different look at it. This one, since it's a 4.5 month hold, we want to look at the theta. And if you look at this, it's only 1 penny, which basically means every single day that goes by, you're only going to lose $1 value of those contracts. So being a longer term hold, that's not even a concern for me. We're going to lose about $1 a day, and that's just not going to be significant enough for me to worry about the trade. So we're okay holding this one for longer term. The theta is not going to hurt us. Now, when I said we're going to give it about $1 room to that downside, maybe a little bit more, the delta is 34, meaning every time the underlying moves up or down $1, the contracts are going to move about 34 cents, given everything else being equal. Now, everything else isn't always equal, but that's a rough estimate of what we can be looking at. With a dollar move in the underlying, these contracts will gain or lose about 34 cents. If we're in at about $1.32, 34 cents represents about a 25% loss if we use that as our cut. So again, if we give it that extra 30 cents below where the actual gap level was that I was talking about, we're going to give this about 25 to 30% of a loss. So when you size your position, you want to make sure that you can size the position such that you can take that 25 to 30% loss, and that's not going to kill you. So if you take a huge position and you go down 10% and start freaking out, that's poor trade management. You want to give this trade a position size such that you can allow it to drop that 25 to 30% if that's the level we need to cut it at. So here's the full trade setup that we're looking for. You can see this massive gap down over here. It tried to fill it but couldn't. It lost its steam. So that's the trade we're looking for to see if we can get back up there and fill that gap. Now this is a 4.5 month trade. We're going to go out to January with these contracts. So this bottom purple line here, that's where the actual gap down was. This red line was resistance over here and support here. We're going to be looking at the January $20 calls, and I'll show you why later. So we're trading at about 15. This cut line is 14. So if it's that far out of the money, even though there's time, if we go $1 against us, I just don't want to hold on to this much further because we're already going out of the money. So even though there's time, if we drop $1 and then dropped even more, it would just be too far out of the money for my liking. This is a relatively slow mover for the most part. So this isn't a ticker that's going to jump $7 in one day. This isn't your Amazons, your Teslas that are going to move, 30 or 40 bucks a day. So I don't want this one moving too far against me if I'm already going out of the money. You can see this trend line here. We had 1, 2, 3, 4 touches on that, and it broke below that. So again, not a good sign. I want to see an uptrend hold, but we didn't make a lower low from over here when we dropped. So we held this area here. I want to see it move into this gap zone and fill that gap. So here's what we're looking at. Let's zoom in even further. You can see I have this gray shaded area here. That's a cause for concern. You can see this candle was support, this was resistance, this was support, this was resistance, support, support, resistance, support, resistance. So this gray area here, it's only an 11-cent shaded area, so it's not a huge range that we're really looking for. But if it gets to that area, of course I want to see what it's doing there, because these candles here got into that zone but couldn't break above it. So that's a level I'm looking for there. 1675 is clearly because this candle here couldn't get above it. This candle got above it by a penny or two. This candle got above it by a penny or two, but it really couldn't get past this area. It almost tried there, it tried there, it tried there, and it failed 3 times. So we're going to put an area there. If it gets to that level, we're going to go ahead and watch that. 1787 was the high over here. Let's zoom in again. So it tried to fill the gap here and it got rejected at this point. That's where that 1787 line comes in. And above that, we have the actual gap filled up at $20.22. So here's why we're looking at these January 15th $20 calls. On Friday, we saw some flow come in. Now, this is not the best looking flow. Here's what caught my attention though. 1136, 1137, 1138, 1140, 1141, 1144, 1149, 1157. So they didn't come in super hard and heavy, but they did kind of repeatedly hit this one in a relatively short manner. The other thing I don't like about this is the dollar amounts. 20, 18, 18, 18, 19, 31, 19. So they're not putting a huge dollar amount into each one of these. So it's not really flow that I would necessarily follow as like a massive flow trade that I have to get into. So I initially said I actually don't like the flow. However, I pulled up the chart and then I started looking at a few things, and the chart itself gave me a technical gap fill trade. Then I went back to the flow to look at it. The contract started at $1.11, $1.12, $1.13, $1.14, $17, $19, $25, $21's $1.25. So the contracts were moving up. They were sweeping into these. Ask side, there is a bunch of bid side activity here, but I'm not worried about that. That's not really someone closing out of these positions here. I just don't see that as a possibility. These are more opening transactions. They went up to $1.32 and they were still buying ask side sweeps. This one for $87,000. 64,000, 109,000. So the dollar amounts are starting to increase a little bit. Remember, these are all the $115, $20 calls. That's why I'm selecting that as the contract. And if we go back over here, this gap fill right here is $20.22. So that $20 contract makes sense. The $115 expiration makes sense because again, this isn't a quick mover, so it's going to take some time to fill that gap. That's a big move for a $15 stock. So we have the gap fill level here was the strike price that they chose. We have 4.5 months of time for it to do that. I don't think this is too risky of a trade, other than, again, I don't know the oil industry. So this is purely a technical analysis trade. I don't know the sector, I don't know the company. This is just based on the chart and then using some flow to kind of coordinate that to set up this longer term swing trade. So there you go, guys. There's a potential gap fill trade. We're giving it 4.5 months of time to work out. You've got your upper and lower levels marked on the chart. If this is the type of trade you do and you decide to take this one, leave a comment below. Let me know how it works out for you, and I will see you guys at the opening bell.